Everything. All roads lead back to momentum. At least in my mind.
That's the title of the pod.
All roads lead to
All
momentum.
roads lead to momentum. I mean, but you could look at that from multiple different ways. Like,
oh, dude.
Yeah, all roads lead to that to momentum, the factor, but like it's a lot of momentum and momentum, like all of the.
Oh yeah.
There's. Yeah, there you go.
All right.
That's our snippet.
That's our snippet. Hey there, Thursday, February 29th. I got Ian across the table from me. This is Will. Is today leap day? Leap year?
It is leap day and leap year.
Both.
Yeah.
I was in a group text and people said they were going to a leap year party tonight.
Oh wow. That is
I didn't know that was a thing.
That sounds like a fun group text.
I know. I'm not going. But there are some other good things to talk about here and celebrate today. One is the end of February. March 1st will be when this podcast is coming out. Ian and I were talking before we started recording. There were so many reasons, as always, it seems like, to hate the market, especially in the month of February. You had a Q4 that was off the charts. You had a strong January. So people were expecting, maybe we get some tax loss selling in January, push those gains, defer those gains to a new year. That didn't really happen. February seasonally is a weak month for the market, weaker based off the average returns. That didn't happen at the time of this recording. It looks like the market's going to be up over 5% for the month of February. And on top of all of that, there was this rhetoric, increasingly loud rhetoric, that people were expecting a pullback for the market. And you had the stat, what is it? How many days since we've seen like a 5% correction for NDX or something?
Yeah, I mean, so it's been Nasdaq 100 there would not been that many times that you get more than 100 days without a 5% pullback historically. We're at like 122, I think, right now. We're at 120 days as of Monday, so I guess we should say 122.
So point being is that it's been a while since we've had an actual price correction. People have been calling for that. There's not a ton of big support areas nearby. Big inhale, really no breather so far. So that was one catalyst for a pullback. The other one was the rate expectations. Economic data came in a bit hotter, like stronger than expected. So which that deferred some of the rate cut expectations. You would think that would kind of take down some stock valuations. At least at this far hasn't done so in a material way. And then people were screaming about breadth for a long time. So not enough stocks participating in the rally. It was just the 7 or 8 names carrying the market higher. And there was some truth to that. We definitely saw some kind of bearish divergences, more stocks on sell signals, more stocks moving to lows versus highs. But I think as we start March, that tone may be able to shift a bit. We've seen some good movement and participation. Small caps have picked up. So I think there's some good hope for the new month.
Yeah, I mean, you said you were celebrating the end of February. I mean, I kind of wouldn't wish it would keep going, right? I mean, it's been a pretty solid, it's been a pretty solid month of February, like you said, with a lot of this stuff. And I think that's, like you said, surprising. It's something that not a lot of people were expecting. But when you look back historically, it's really not that surprising from just a broader thought perspective, right?
Yeah.
If everyone's expecting the market to go lower, it's probably not going to go lower.
True.
And I mean, when you're looking at things from like an overbought oversold perspective too, like some of those different indicators, we have the S&P 500 index is still north of 80% overbought. It's been an extended territory on its default chart there for a while. I mean, you're looking at 6 consecutive buy signals that we have for the S&P. So I heard a stat earlier today, I think it was 13 new all-time highs for the market so far this year.
Nice.
In the first 2 months, which is a lot,
Yeah.
right? But you look at like the NDX, which is, I mean, the Mag 7 conversation, it's already up 6% plus on a year after a 50% return year last year. It's 55% overbought. It's not that high, right? I mean, that's we saw a little bit of pullback and then some resurgence there, but 122 days since we've seen that kind of 5% pullback correction there in the NDX. Wouldn't be a bad thing if we saw that come into play. And if we did see that come into play, that would put you like right around the midpoint on a trading band. So that's, again, not the end of the world if we do see some of this movement happen. And taking a look at some of the study, like you mentioned in that conversation around when you've seen other periods where you've seen a long period of time between 5% pullback for the NDX, doesn't tend to be all of that. positive. It's not like, hey, we haven't gotten it in forever, and then all of a sudden we're going to fall off a cliff.
Right.
It's more so we haven't gotten in forever. Okay, we need a little bit of a pullback, consolidation, right? You need to take a breather before continuing to move higher. And so you look at some of the dates on there. I mean, there are certainly some dates where, hey, we haven't seen in a while, and then we see a deeper than 5%, deeper than 10% move. But you look at a lot of other dates and you see more kind of consistent movement higher from there. I mean, you're looking at like the mid 90s, the kind of 94, 95 period. You're looking at the 2011, 2012, 2013, 2014. We just saw long stretches of periods without a massive drop or a notable drop in the index. And I mean, the 2010s period was a pretty good environment for large cap equities, I'd say.
Yeah, a couple of things come to mind. So I think people forgot about 2022. That was an elongated bear market.
It was very long historically.
Yeah, a very long
for the index specifically. Yeah.
Yeah. So maybe there's some credence there that we just came off a massive bear market a year and a half ago.
Right.
And then two, I think you were on the podcast with Chuck a few weeks ago when he talked about you can pull back in price or pull back in time.
Yeah.
And I think there's a lot of wisdom to that saying. I haven't seen that circulated out a ton, but what he's getting at is kind of what you're maybe getting at with some of the stats is that, yes, you have some instances where you saw absolute price decline, like the market literally pulled back 5-10% plus. And then other times the market consolidated at current levels, and that magnitude of outperformance or that continued ascent just slowed.
Right.
And time kind of caught up.
And you can see that on the default chart of the Nasdaq 100. So over the past week, over the past 7 days, right, through the 28th, I guess. So the Nasdaq 100 is up like 2.2%. Has not moved on its chart in that time. It's just kind of seen a little bit of movement lower and then kind of really just sideways movement that doesn't lead to a chart change.
Yeah.
Right? And if we're not going to see enough important movement to lead to a chart change, then you're just going to see some kind of normalization there in the overbought oversold reading. Yeah. This is kind of an interesting deal to note. But I mean, the one area that you were saying there that had a strong fourth quarter, strong January, strong February. Not everywhere in the market had
That's fair.
A strong January.
True.
Small caps were one area to kind of consider there, just to kind of look toward that. You had the Russell 2000 up over 14%, I believe, over the final kind of few months of last year. You saw a pretty notable pullback in January. I mean, small caps, everyone came into this year, hey, S&P and Nasdaq 100 were the place to be last year. So this year, it's got to be the equal weight S&P. I mean, it has to be small caps. Right. They're going to be the areas to be. And that wasn't the case throughout January. Yeah. But after you get a 14% up move, you'd expect a little bit of, maybe here, instead of a pullback in time, we saw more of a pullback in price. But you look at some of the major small cap representatives, like that default chart there for IWM, not a bad looking technical picture right now.
Yeah. It looks good. I'll say it. I think it looks pretty good right here.
I mean, you got 3 consecutive buy signals. You are bumping up against that like overhead resistance, like we saw in the like that 200 to 210 range. Yeah, tends to be pretty notable resistance, and it has been since what 2020, early 2022. Just kind of been stuck in that range. I mean, you squint your eyes a little bit and it's just move sideways. It's wide range, but a range nonetheless. But where it's making some solid attempts at kind of moving higher from here, and again, IWM 30% overbought. Yeah, not too extended there on its chart. So that's one area that you can could be pretty interesting to look toward as we move into March.
Yeah, and with small caps doing better, if that continues to be the case, they're outperforming today. I think they've outperformed this week. If that continues to be the case, you're going to see some of those participation readings start to tick higher. So all the things that people were like getting frustrated with, breadth is declining, more stocks are hitting new lows than new highs. Again, if small caps keep going, some of those participation readings are going to turn around, and some of the bearish talking points on participation are probably going to start to dwindle up a bit, or maybe they just get flipped around and say that now it's too frothy and there's too much participation.
I'm perfectly fine if everyone wants to keep being contrarian, because then we'll just continue
working out.
Right.
Yeah. That's
a good point.
Yeah. I mean, I think you and I both read some Morgan Housel. He's a great kind of investor psychology, behavioral finance guy, definitely popular in our time right now. He says correctly that like being bearish is typically seen as smart, prudent, thoughtful, right? And then being bullish is naive.
Right.
or you're dismissive of all the potential concerns that could be going on. So I think that's something to keep in mind too, when you're seeing headlines, when you're seeing people complain about the market and why it can't work. I think that's been pretty true.
Yeah, absolutely. And that's why we that's why we do what we do on the technical side, right? That's why we look at the X's and O's. We don't have to let that subjectivity come into play. And when you look at it on like the X's, like you mentioned, some of the participation side of things, you look at that picture of small caps, right? You look at that small cap picture. I mean, you saw IWM top out really in the 2021 period, just kind of move sideways throughout the whole year. So like the first part of 2021 is where you stopped seeing gains for IWM. Saw rapid growth, obviously, in 2020, as did most, or back half of 2020, as did everywhere in equities. And then it just stopped and in 2021. And you look at like the bullish percent for the New York Stock Exchange, which is focused on a very wide inventory of stocks, a lot of which are small caps. And that's a very frequently followed indicator on our platform, just the percentage of stocks in the New York Stock Exchange that are on a buy signal on our system, right? That indicator has not been able to get above 64% since midway through 2021. So you had it kind of, the indicator topped out right around when small caps topped out. It moved lower, and we've seen it attempt at pushing higher, but hasn't been able to break north of that 70% level since then. So I think that's one point. We just saw a reversal down in January of this year on that indicator, topped out at 64%, currently sitting at a 54% chart level, but it's moving a little bit higher again, right? So if you see small caps improve, you'll see some of these other participation readings move higher as well. And I mean, at the end of the day, there are other areas than the S&P that you kind of could look toward, but as long as the S&P is still doing well, right, there's no reason to fight it.
Yeah, that's easier said than done, I think. Like for advisors managing money, for individual investors, whatever it is, it's not exciting to own the S&P 500, but that's what's worked for the past year and a half. It'd be great if more stuff works. I think small caps could definitely get going. You mentioned that participation breakout. If that happens, you can look at the advanced decline line for the New York Stock Exchange. That's been turning around as well. It stopped making lower highs. So I think all around some positive on the participation front.
Yeah, and then on the other side of the coin, I mean, when we're talking about like large or small cap kind of exposure for a lot of this, but there's other ways to get at exposure within the large cap space too. And I mean, we'd be remiss if we didn't talk about the improvement momentum scene. Right?
All roads lead to momentum.
I mean, they do, and then at the end of the day, that road might take a little longer than you might like, right? And which we just went through one of the worst 18-month stretches for momentum ever. Right. And I mean, hopefully, knock on wood, that road is ended, but momentum's had a really strong start to the year. And I know you have some stats around that. The way we look at momentum can be kind of specific, but just momentum in general has been doing pretty well. I mean, the trends that were very difficult to follow trends when they were moving pretty quickly last year, even though you get such a massive up move in broader indices, when you see 3-month trends that then stop and then start again, that's tough for momentum strategies to capitalize on. But now they're able to capitalize on that because we've seen that kind of consistent movement, right?
Yeah. I mean, like you said, momentum's been great to start the year. For those uninitiated, I'll call it, the whole idea is that you're buying stocks that are going up more than all the other stocks. So you're buying the winners is what you're doing, and you're avoiding the losers.
Which is very important.
It is very important. Yes. Equally, if not more important, is to avoid the losers. And it's so counterintuitive because the stock goes up 10, 15%. It's like, oh, it's become more expensive. Got to take profits. It's got to come back down now. But no, momentum actually says, awesome, we're going to go buy that stock.
Like NVIDIA, right?
Like NVIDIA. Right. Yeah, that's been a high momentum stock for who knows how long now. I don't have the date for it. But to what you're saying, and back to what you kind of teed me up for, yes, momentum is having a tremendous start to the year. They picked up the winners at the end of 2023, finally, when they started to catch up a bit. And so far this year, the winners have been the same. So MTOM is probably the biggest momentum factor ETF out there.
MTUM,
MTUM.
Not our fund.
Not our fund.
Competitive fund.
Very competitive fund. Yeah. It's up 15% year to date, which is mind-blowing to me. I don't know the last time MTOM was up 15% year to date. After today, it'll probably up a bit more than that. We've done some similar studies on our products as well. Really similar behavior. And I was looking at this idea of like, does momentum beget momentum? So does momentum in the factor lead to more momentum for the factor? if that makes sense. So
Yeah.
if you look at huge months of outperformance from momentum, so if momentum just crushes the S&P 500 1 month, is that any indication of if that factor is going to keep performing, or is it just a blurb? It's a blip. Do those happen during trends of underperformance? More often than not, it doesn't. So more often than not, you see a huge monthly alpha print from momentum. That tends to lead to more outperformance from the factor.
That makes sense. I mean, when you think about it, momentum is inherently, no matter how you cut it, whether you're looking at our point and figure relative strength, where you're looking at other 12 minus 1, whatever it is, it's trend following. You're trying to follow what's doing well, right? And so if you see the stuff that has been doing well get a big outperformance, I mean, that's likely going to hopefully kind of continue from there, right?
Yeah, exactly.
It's that breadth conversation too. It kind of speaks to, like, if you just see a big up moves for the broader market, get a big breadth thrust, if you will, it's not a time to sell, right? When you're looking at the market perspective. So if you get a big up move from momentum, kind of same thing kind of makes sense.
Yeah, and I think momentum, for the first time in a while, it kind of jives with some of the fundamental and like qualitative rhetoric out there right now, because the cap weight S&P, cap weight indices, everyone's really concerned about those. But even if those stagnate, momentum can do really well. If the market goes sideways, that's fine. And even if breadth declines, as long as momentum is in those areas that are holding the market up, that's okay for the factor. So it's in a good position. It's had a great start to the year. The data suggests that the degree of this start is decently, call it predictive or indicative of the fact that it can keep going forward. So we're hopeful for that. We're always hopeful for that. And like you led with, it was a horrendous underperformer, a historic underperformer for probably a 3-5
no matter how you
stretch. No matter how you cut it, 3-5 year stretch, momentum's been terrible. So it's due for some mean reversion. Hopefully it comes this year.
Yeah, and I mean, momentum is inherently self-correcting in nature, right?
Yes.
It's not supposed to be wrong for that long because it just constantly pushes to strength.
Yeah.
And you just need that strength to remain consistent. And now we're seeing some consistency there, even if people don't like it, even if they want to pull back. I mean, that consistency has been there, and so hopefully that's continues to bode well as we move through the rest of the year.
Yeah, that's all the words I had for this week.
Yeah, I think that probably brings us to a good place to, as you would say, land the plane.
Yes.
Cool. Yeah. So, I mean, Will, thanks for having me back on this week. It's been a couple weeks here. It's good to be back in the saddle.
Thanks for coming back on the podcast.
Yeah.
I think you've still done more podcasts than me by a long shot. So
I had Chuck on, and he was like, "Thank you for having me on." I was like, "No, Chuck, thank you for having me on." Yeah. But nonetheless, we got a lot of stuff that we're looking at, a lot of conversations that we're having here in the office, and some of that we're trying to bring to the podcast, right? But there's obviously a lot of other stuff going on there. So if you all as listeners, I mean, seeing anything you want us to talk about, seeing anything, you can comments, questions, concerns, stuff, don't reach out to us. It's dwa@dorseyright.com. And then maybe we can loop in some of that conversation next week.
That'd be great.
Cool. Awesome. Well, thanks again, Will. Thanks everyone for tuning in this week, and we'll be back to talk with you again next week.